Corky, we'll start. It's been one of the themes of today, has been talking about how private investors really don't know as much as expert fund managers, and we should all follow the experts, that is to say, fund managers. Gabrielle will no doubt mention the Krauts at Forum, who filled their boots with Globo shares even as it went down the pan. Sam Antar has, in his video, which was a classic, by the way, was talking about how he found fooling institutional investors even easier than fooling private investors. There seems to be a sort of this cult of the fund manager, and particularly, dare I say it, Neil Woodford, that if he invests in more or less anything, we just feel we have to follow it.
Yeah, I see.
Are we mic'd up, Corky?
No.
No, we're not mic'd up. Can we get a microphone for Corky, please? Do you want to just sort of breathe into me? We'll get close.
I knew there would be a flop.
Well, I don't really want to sort of huggle up to you, Corky, but can we get a microphone for Evil, please?
How's that going?
That works.
Thank you very much.
Okay, thank you.
No, my view on fund managers, before we deal with Woodford, my view on fund managers has always been that they have had the benefit of very extensive research services which came economically because of the time they could allocate to researching a particular investment and because of the support they would get from a major broker as the industry was then constructed. But the internet's changed all that, and I'm quite certain, as opposed to I slightly think, that the average private investor can do as well as an institution, and actually a great deal better. I can't see where Gabriel's sitting now. Where is he?
He's hiding around the corner.
Is he?
Yeah.
Well, I can tell you this. When Gabriel Grigo telephoned me at my home about 9 months ago, we were just discussing this, that, and the other, and we touched upon Globo, I had no idea what sort of research work he would do on Globo, and it's testament to what can be done if a chap puts his head down and does it properly. Anybody can do it. They've just got to do the work. And I may add that I hope when he comes on, he will not hold back on the extraordinary in-depth analysis he made of Globo's books. It really is astonishing. And I said to him, golly, that report must have cost you $100,000 in investigative agents and the rest. And he said, it didn't cost anything like that. And furthermore, it just required time to go into it. And what a terrific job he did. So I hope he interests, I'm sure he will interest investors here today when he gets up on the stage. And I mention that on the basis of compare and contrast. On the matter of Neil Woodford, I don't knock him at all. The fact is that he had an absolutely extraordinary career at Invesco, which everybody will have known about or read about. And the question is, how will he do now that he's gone off on his own? And the answer to that is I don't know. And if I may say so, I don't think that he does either, because it's all new stuff in a sense, with a new range of investors, institutional mandates and that sort of thing. And how it actually turns out remains to be seen. Certainly, one or two investments that I've seen him make strike me as pretty overpriced. And perhaps he'll prove me wrong, but I'm thinking particularly of Allied Mines.
Allied Mines is a stock which Baby Bear Graham Neary brought to our attention some months ago.
Yes, indeed, yes. Well, the fact is, they can hold the... I say they, it sounds like a conspiracy, doesn't it? But they can...
we're the global shorting conspiracy. They're all the honest people.
I can see that Allied Mines can be held up as an investment for a long time.
What does Allied Mines do?
It does something in medicine. I don't know what it is. I
It
don't.
invests in other companies, doesn't it, Corky?
Well, it may do that, but I don't mind. I'm merely saying that the average punter cannot get on top of what Allied Mines is doing or is going to do. In fact, it was brought to my attention by a racehorse trainer up at Newmarket who pointed out to me that Allied Mines was going to go through the roof, and I said, why? And he said, this man's a chap who's landed terrific gambles over the years, and he said, well, it's got this man Woodford behind it. Well, it's all very well, but there is no set of figures to support this view. And I won't say sure enough Allied Mines collapsed, because that's rather foolish. But the fact is that it's an example of where the aura of Woodford has transferred into share prices. So whereas I'm sure he will have successors, I think it would be practical for the average citizen to be rather sceptical until the matter's proved again.
In the case of Allied Mines, there was an American hedge fund which did a deconstruct of its portfolio.
Yes.
And came to the conclusion that the portfolio was, at best, worth, from memory, around £2 a share.
Yes.
The shares were trading when Graham first highlighted them at about £6, weren't they?
Getting on that way, yes, that's quite true. And sure enough, the stock got zonked. For some reason, people are very forgiving when the argument is incisively presented. And that's a very good example. Because absent a proof that the 190p calculation was wrong, I think it's correct to assume 190p is the proper figure. And it must be said, just because Neil Woodford has had a look doesn't make 190p worth 380p or 450p. It just doesn't happen. He knows, he's not a fool, that if he gets involved in a stock, it's bound to give some uplift to it, and good luck to him with his reputation. He's done a terrific job. But the fact of the matter remains, one's got to work on the basis that gravity is forever attendant in this world of ours. And that's how it's been for the last few thousand years, at any rate. I don't imagine it's going to change.
In terms of gravity being attendant, and I hurry you along because I'm conscious of your visit to the gym. Jim Mellon earlier enthused, as you would expect him to, on the prospects for biotech stocks. Yeah. But it strikes me that the valuations of some of the biotech stocks are crackers. And there are two which you mentioned when we were discussing this as part of our in-depth preparation late last night.
Yes.
Silence Therapeutics,
well,
of which you are short.
Of which I am short, that's true. Incidentally, people here today may be interested to know that I'm in daily contact with Jim on currencies and various investments, and I can tell you from close personal experience that he is breathtakingly good at it. And whenever
How's your investment with him in a racehorse going?
Well, unfortunately,
that was one of his less astute investments.
Yes, well, he invested on my advice.
Oh, well, that was always a mistake.
No, I'm afraid that's straight off to the kitty cat factory. I'm afraid, unless someone wants to spend £1,500 a month looking at a racehorse, and this particular one kicks and bites as well, so I'm not sure that it's everyone's first choice. Anyway,
we're back to biotech.
On the back,
we know you're an expert on.
Well, it was an analyst who I know advises Jim, who mentioned that I had to be careful about Silence Therapeutics, because although it's run by a very clever chap called Ali Mortazavi, who's an international chess champion, and I don't say that skeptically. I think you've got to be very clever to succeed at international chess, and I do think that Ali is extremely clever. I've had many an engaging hour with him over the years, starting from getting at least 20 years ago. However, the reality is that their central product for cancer care apparently only extends life by about 2 months, 3 months, something like that at most. And you can bet your boots that if anyone wants to buy it, they're going to have to pay for it. The people who are not prepared to pay for it will be the NHS. It just is going to be too costly. Now, if that turns out to be the case with silence, then it simply won't have the market that it imagines. And I think silence will fall quite sharply, notwithstanding the intelligence that Ali brings to bear on events there.
There was another one, D.
Well, it's the same thing.
What's the market cap of silence?
Oh, Lord, no, I don't know, 300-400 million, something like that?
Right.
I think so, but I've slightly lost count of it. I'm just saying this is, I don't think one could responsibly buy a share where the future is not sensibly identified. And I think that's a golden rule of investment. And of course, I think the same applies to 4D Pharma, which has the ticker code DDDD, easily remembered. If you remember that beer from 50 years ago, 40 years ago, Double Diamond, you remember? Well,
I think most people aren't as old as you, Corky.
Well, that is
the younger generation. They don't know what you're talking about.
Well, actually, looking round the hall, there are people who are quite as old as I. And for all I know, they've had a glass of Double D in their time. But anyway, whatever. 4D Pharma, ticker code DDDD, is another one of these cancer cure merchants. And I think because the average investor cannot argue against a drug outlook, his inclination is to say, well, I'll just hold on, or I won't sell it. And sooner or later, if I'm correctly informed, and that is a big if, but if I'm correctly informed, there will be news hitting the market on 4D Pharma which will slice the price. There's no volume in the stock at all. It's capitalized about 500 million. It's up about, eightfold since flotation. And there is no solid sign that this is going to go ahead. And I'm not saying it must fail. That's ridiculous.
Aren't there some quite sort of clever stock market operators behind it?
Oh, they always are very clever. But the fact is, why should the private investor take a wild gamble on a stock which really hasn't got figures that stand up to examination? I'm not saying 4D won't have figures in the future. It may well have figures in the future, but it certainly hasn't got them now. And I think that's given the number of shares one can buy, where there are really good figures to encourage a purchase, why should one go off on these biotech dreams? And they are dreams.
I suppose on a risk-reward basis, you would take the view that if a company is valued at 600 million, it hasn't got a product approved.
Yes.
If it gets approval, then, and it's a big given. I mean, the phase 3 trials, most things fail.
Yeah.
But if it gets approval, then you have to say, what's the marketing, what's the length of the time it gets to market, what percentage of the market's going to get, i.e., with a 600 million market cap, there's a lot of good news discounted. But if there's a regulatory setback, then you're talking collapse-a-rooney.
Oh, absolutely.
So on a risk-reward basis, it just looks unattractive.
It must be unattractive.
Without going into your in-depth knowledge of the biotech sector.
Now, I'm relying on my in-depth knowledge, as you call it, of common sense.
Okay. Moving away from the biotech thing, there's a stock which I know Lucian's identified. As we get into the latter stages of a bull market, do we think we're in the latter stages of a bull market, Corky?
I've given up forecasting the collapse.
Because you got it wrong, but just for the sake of argument, are we in the last stage of a bull market? There are all sorts of signs we are, aren't there?
Oh, I keep on thinking of seeing some particular sign that the thing has come to an end. I mean, this quantitative easing thing is bloody balmy. It cannot go on, and yet to say it'll end next week or next month, it's really extraordinary. So the answer to that is there'll have to be some sign from economic activity which suggests that the buoyancy within the economy has come to an end. The sort of straw that I grasp at is reading in yesterday's Evening Standard that Black Friday had been a failure. Well, I could have told them that because of all the damn silly names. Black Friday seems to me calculated to put consumers off. This is, I'd call it Golden Friday or Gold Friday. But anyway, there you are. They ploughed in. And in fact, the figures have clearly been, at a retail level, pretty disappointing. And of course, that is the sign that one is looking for, because if the trend continues, that will be a downturn. And whether that's the end of the effects of quantitative easing or not, I do not know. All I know is that one day this lunacy will have to stop.
Isn't that, I mean, there's a wider trend? We've seen a depressing number of, or from your point of view, a good number of profits warnings.
Yes.
An accelerating trend from across all sectors. Yeah. That, to me, doesn't seem to be discounted in the fact that shares are pretty much close to their sort of highs.
Yes, I agree. The fact is, you're quite right, there are quite a number of profit warnings coming through of one sort or another. And there's no doubt there have been some, to my mind, I've got a couple here in front of me, of low-quality flotations this last year, which are just crying out to provide investors with disappointment. For instance, say I consider HSS Hire Tools, which was highlighted originally by my friend Matthew Earle. This was floated in February of this year at 210 pence, and it now stands at around 53 pence, something like that. And when they floated, they raised £103 million, of which £13.5 million was paid out in issue expenses. I mean, really, why investors put up with this sort of nonsense, I have no idea. Well, within a few weeks, virtually, HSS started to indicate that it wasn't going to be making serious money. And you can argue, if you look at their balance sheet, that this is going to have to be refinanced below 10 pence a share if it falls to be refinanced. And it's not clear that it will fall to be refinanced such that investors control it. To give you an idea, roughly speaking, intangibles are £179 million, but that arose from the buyout that led to the formation of HSS prior to flotation. So I don't think the intangibles are worth a bean. And the tangible net asset value is 159 million. Well, knock off the intangibles, and this company has minus 20 million pounds, liabilities exceeding assets. If it has a bad time trading, it will become unrefinanceable. In fact, they announced to the market about, 3 days ago how they were going, and there's no getting away from it. There was a lot of blah about key indicators and all the rest, but nowhere did it show that there was going to be a profit. And I don't care what anybody says.
So old-fashioned, talking about things like profits when you have key metrics and KPIs to talk about.
I think the tool hire business has been as simple as you can imagine since day one. Either people want to queue up and hire tools for this and that, or they don't. And of course...
What knowledge you have of the tool hire business?
Well, I do have some knowledge.
Do you?
Yes.
A little man round to do things.
No, I know about little, but anyway, the fact is that it is an important adjunct to small-time builders and so on, and of course those householders who want to have a go at doing up their own property. Certainly buying lots of drills just for one-off jobs which then are chucked away in the cellar and remain unused is a silly practice, and that's the scope for the hire shops. But the trouble is, the people are not in practice hiring these tools, at least not on the scale which the promoters of HSS might have given poor suckers the hope to believe in 9 months ago. So it's interesting that a company like that can be floated.
Does that tell you the fact that venture capitalists, A, want to sell it, and B, that institutional investors lap up this rubbish? That surely, again, tells you that when the venture capitalists are selling and the institutions buy this rubbish,
yes,
that tells you, again, you're close to the top of the market.
Yes, I certainly think that's so. And in fact, a very good example of a company like that is Pets at Home. I don't know whether anybody here has had a look at the balance sheet of Pets at Home, but I don't know who's the lead venture capitalist promoting it, but I do know KKR had a large holding, which they sold about 2 months ago. And the reality is that Pets at Home is a really very simple business. It's just dog food and then some veterinary practice. And they're starting a new chain of shops. They're up to 3, incidentally, so I wouldn't get that excited, called Barker's. Well, that's a very good name for a shop that looks after dogs.
Have you ever been to a Pets at Home store?
I used to keep mice as a boy, but that's about as far as it goes.
The answer therefore is no, right? Okay.
Well, can I go on?
Yeah, you can carry on, yeah.
There are 500 million shares at issue, standing at 263 pence, which is a capitalisation of £1.3 billion. And then the net assets are £811 million, but from that you must deduct the goodwill valuation, which is just a figure inserted by the venture capitalists who floated the thing, of £959 million. So the net tangible asset figures of Pets at Home is minus £148 million. Well, sooner or later, the competition in the pet food business is going to impact. And I don't know whether it happens next year or the year after, but it will happen. And I just think anybody who gets taken in by a business like that is crackers, because it is going to end in tears. There's nothing dishonest about the prospectus. No, I'm not suggesting that for a moment. But the fact is that people have just absorbed something which has little prospect of success in share price terms. It may be still trading very happily in 4 or 5 years' time. For its sake, I hope it does. But the fact is that in stock market terms, it's going for trouble. And that trouble will crystallize. And when it happens, investors will be irritated, and some will claim that they were surprised. Well, it depends on what you're surprised by, I suppose, really, but I wouldn't have thought that's a very good idea.
In terms of, I mean, one could say that venture capital floats.
Yeah.
You dress the thing up, you polish it up, you strip out as much cash as possible, and then you float it on the mug punters, aka institutional investors.
Yeah.
That is sort of financial engineering, and again, if you are of our mindset, and we think that there is going to be a correction in the real economy and also the stock market, that is when the financial engineering stocks unravel. There is another one from the exciting world of carpets.
Yes. Well, funnily enough...
You're an expert on carpets too?
Well, I've certainly known Victoria Carpets, as was, now known as Victoria, for many years. And funnily enough...
It's been a serially boring company.
Well, it hasn't been in share price terms in recent times.
Until recent times.
I may add, I don't think I'm being indiscreet, but Victoria was the last company I ever discussed with Jim Slater. He very kindly looked at his point of view, and for what it's worth, he thought it was very dear, but he has a close relationship with various brokers, and one of them, Hargreave Hale, said they thought the chap who runs Victoria, a fellow called Wilding, he's an ex-merchant banker, he's a New Zealander, is very able. But I don't see how Mr. Wilding can be that his ability can rub off on a carpet business which is so prosaic. I mean, the fact is, making carpets is as old as the hills. Providing underlay, that's as old as the hills. There isn't there's nothing new about it. And there is a point that there is a cycle in carpets. My God, there's a cycle, because at the moment people are pinging away with their credit cards buying carpets, and there are people whose order books are tolerably full enough to cause them to buy carpets and put it down with underlay and all the rest. It's really an expensive consumer item when it comes on. But at the moment, the figures for Victoria are those which would make one reasonably content. But let's be realistic about it. This company's shares stand at about £13, and it's making perhaps 25 pence per share per annum. Well, I think you can see that a P of the order of 40 or 50.
52.
Well, I'm obliged to you for your exceptional speed. Yeah. Anyway, the fact is that it's a very, very high rating. And of course, if at any time things go into reverse amongst consumers, then there's no doubt Victoria will be poleaxed in share price terms.
Didn't Victoria take on debt to do a buyback?
It most certainly did. And there's been a lot of distribution of cash from this company. But the reality is that as we speak, the net tangible asset value of Victoria is minus £25 million. And really, to get up to a valuation of the order of 235 million is pretty hard. And I think, although Mr. Wilding has clearly hypnotized various brokers down in the city, I think it will end in tears at this price. I would add that it's quite difficult to borrow stock, but it's not impossible, and it's certainly worth having a go. Certainly, I think on a one-year view, the share price at £13 is extremely vulnerable. I mean, it's, as I say, it's difficult to borrow stock, but if one can borrow stock, one should have a go. I myself have got to be just a teensy-weensy bit circumspect in talking about Victoria, because when I wrote about it in public a few weeks ago, the next thing that happened was a letter arrived from Brown Rudnick solicitors saying that they'd like to do this and that to me. And I was all in favour of going around and bopping them on the nose. But solicitors from my side, Kerman, said, well, actually, it would be best just to settle the thing down. And so that's how it happened.
But you should work for a media organisation which has the Jonies. We wouldn't have done that. We've written about them.
Well,
we're not worried.
The fact is that what is interesting here is that the management of Victoria should be sufficiently concerned to deploy the solicitors with the threat of defamation proceedings.
What did you say?
I can't go into that because that would be a repeat of what they identified as a libel. And foolish I may be, but I don't see how I have to be that doubly foolish. That's going to be...
I'll tell you what, you tell me later and I'll run it in my name and we'll see what happens.
Well, okay, fair enough.
Okay, I'll do that.
Well, can I just finish this off? I would draw the audience's attention to the fact that the stock in Victoria is very tightly held, and that's why you can't borrow it. Mr. Wilding and his pal, Mr. Anton, have got a lock on the stock. And the fact is, I think if you've got a lot of stock in a company and you're content with the company's conduct and trade, you're very happy to lend it out and get the extra income from the borrowing charges you're able to levy. But for some reason, the management of Victoria are not doing that. And I'm not saying that that's proof the share price is overvalued. I'm merely taking it as an indication. And that being the case, I think we're just going to sit there and we'll make a lot of money on the short.
Oh, I think I'll be sticking the boot into them. I fancy this. What's the law firm? Brown and...
Brown Rudnick.
Oh, I haven't got a lawyer's letter from them. I need to add them to my collection.
Yeah.
Brown and Rudnick, if you want to watch this video next week,
yes,
I'll be seeing you soon. Right. I know we're worrying about your appointment at the gym. Now, just want to digress before we go on to what we meant to talk about.
Yeah.
This idea of share buybacks, one of the themes which Zero Hedge is very good on, and I totally agree with it, is because you have cheap money, a lot of companies have been... especially in America, have been buying back their stock. If you look at it over the past year, invariably they've overpaid.
Yes.
They're buying them back on crazy ratings. They're not investing this debt which they're taking on in new plant or anything.
Yes.
So when the downturn comes, they're just going to be left with the debt and no new capacity.
Yes.
This again is symptomatic of a crazy market driven by crazy economics, isn't it?
I agree. The consequence of this notionally very cheap money is to cause a misallocation to resources, and that is yet another reason why the thing will blow up. My doubt, of course, remains, as expressed a few minutes ago, that I don't know when. I only comfort myself by the fact that nobody else knows either. But it's just bound to happen. It's gravity, you know.
Right, in terms of gravity, with our last two stocks we're looking at were ones where disbelief has been suspended.
Yes.
Let's start with an old favourite of ours, Daniel Stewart. Currently suspended for the third time in a year.
Yes. Well, they're putting a bold show on it, but the fact is, the really good staff at Daniel Stewart have walked out and got another job. And quite how the firm keeps going, I don't know.
This is a city nomad and broker which used to specialise in floating China frauds. It floated Knievel, and where I think 25% of the workforce belonged to the family of the managing director.
Yes.
Carry on, Corky.
Well, it's all very well, but I have no idea how Daniel Stewart have been able to raise any money at all. I presume they're losing money.
They are.
Well, they must be, because their main commission earners are not earning commission. So I just don't see how they can make money. They certainly can't make money out of the trade of being a nominated advisor.
Because they're not anymore.
They're not, and compulsorily so, as of a few months ago. So how they get out, I don't know. I mean, I have to declare that I am short of Daniel Stewart. I think I'm short of about 4 million shares at twopence, something like that.
The shares are currently suspended at 1.5p. They've completed half of a refinancing. They're trying to get a placing away at 1.5p so that they have enough cash to carry on doing their business. The thing that you're batting against here, Corky, is you're batting against Rob Terry. Rob Terry, the Knievel fraudster, he had 9.9%. I think he's done some dodgy deal which we don't quite understand. He's still got 7%. And he tells those people who still believe in him, and there are some people who believe in him, that the shares are worth 10p.
Yeah, well...
That's helped them.
No, well, I think Rob Terry is a very unusual person, that having had an extraordinary run of self-levitation at Knievel, I think he thinks he can do it again by coming up with absolutely any figure you care to think of. Personally, I think he's a clot. And furthermore...
I think he's a word beginning with C, which is not clot.
Well, that's up to you.
Crook. That was the way before you say anything. Crook.
Well, that's up to you. But I think you'll find that HM government is going to put him on trial before long. And it will be, in my view, it's long overdue.
Do you want to go, when the sentencing happens, I'm going to be there with my knitting needles in the court. Paul Scott's coming. Do you want to come along?
No, I'll rely upon your vivid report.
You'll get one, don't worry.
Straight from the court. Incidentally, I know I'm not allowed to talk about my own personal investment.
No. Let's just finish off with Rob Terry before you. I know what you want to talk about, but I may curtail you. So you are battling against Terry here. How long can disbelief be suspended at Daniel Stewart? My assumption is, by the way, is if they raise £500,000 that they will have £500,000 and a business which will never generate cash, so it's worth £500,000, which is about a 0.1p per share.
Well,
that's my analysis.
It's not cheap running a firm of brokers nowadays. You've got all the compliance people hanging around, and I think Peter Shea told me last Christmas that he has got 3 or is it 4 compliance officers there.
What, were you at the Daniel Stewart Christmas party?
No. I met him on another occasion, and I just said, well, there is no chance for the small firm if you've got people like that hanging around. They cost all told about £100,000 each. Well, if you have 3 or 4 of them, I mean, it's just a huge blow. It achieves nothing at all, just cost. And the scale of these costs is completely disproportionate. And as a result, I'd be surprised, I don't know for certain, I'd be very surprised if Daniel Stewart ever saw the market again. Anyway, that remains to be seen.
So you think in the end you can't defy gravity. Whatever Rob Terry says, you can't defy gravity.
Yes, that must be so.
Okay, the one other stock which has defied gravity, and you've been gay on about what a classic short is for 2 years,
yes,
and you've been completely wrong so far, is Concha.
Oh, yes. This is quite interesting. It's not so much that the share price refuses to go down, which is amazing.
It's gone up.
Well, indeed, it has gone. It's gone up from about 1.5p when I became heavily involved in it to now about 5p.
So how much have you lost on it?
I would rather not discuss it.
How much have you lost on it?
Oh, I don't know. I suppose it's about 60, 75,000 pounds, something like that. But I regard...
You can stable a racehorse for a year for that.
I know, and another one. But anyway, the fact is that I still think it's nonsense in that there is nothing in this company at all. I mean, roughly speaking, there's £1.5 billion of shares in issue, standing at 5p, for sake of argument, and it makes it capitalised at £75 million. There are adjustments one can make for warrants and options requiring to be exercised, but I don't think it makes much difference to the general scenario. What is interesting about Concha is that...
It's got cash of what, 2 million?
It might be 3 million, but I grant you it's
not a lot.
It's an insignificant sum in relation to the balance sheet as a whole. And I would go further that what's striking about it is that although there's this fellow Akers who's nationally in charge, I understand there's a puppet master based in Monte Carlo called Robert Bonnier, who's a name from the past.
Scoot.
Well, that's one of them. But anyway, the fact is...
Wasn't he Regis?
No, not Regis. He did have a hand in levitation.
No, because when last time you took him on,
yes,
it was Regis, and he levitated the share price, and you lost £1 million.
No, it's more than that.
2 million.
I lost 3 million.
3 million. So far, your track record against Bonnier, when he's on the levitating side and you're on the shorting side, is 1-0.
Yes, I agree.
Okay.
But the fact is that...
It's 2-0, actually, because you lost money on Concha so far.
Well, that is true. But the fact of the matter remains...
Tell me when you're up against him again. I want to be on his side.
Well, that's up to you, because you're a friendly fellow. Anyway, the fact of the matter remains that Concha has been announcing to the market that they're working very hard on deals or a deal, but nothing ever comes out. It's really extraordinary. This is now 18 months of no deal. And in fact, if anyone has got the time, it wouldn't take more than 10 minutes, just go back on the announcements from Concha this last 18 months. There is nothing in the RNSs which would give any support to the share price at all. Now, Bonnier is a hard-working fellow, and he may have some terrific wheeze. I'm told there's some wheeze to do with fantasy football, but it's going to have to be a wheeze of heroic proportions to allow a fresh issue of shares in Concha to finance the acquisition of this fantasy football game. And it's going to have to be, I mean, for the vendors, if the deal makes any sense at all, they're going to have to be very impressed that the underlying business is worth vastly more than Concha is currently capitalized at. I'm not saying it's impossible, but I think it's extraordinarily unlikely.
Okay, Corky. Now, Corky wanted to ramp a couple of stocks he owns. What I'm going to do, because I'm going to get Gabriel on stage, and you've got to get to the gym, because it's working very well so far. Keep up the good work. So we're going to call it a day at that point and bring Gabriel on stage. But I will speak to Corky tomorrow, and I will write up ramping his own stocks, which are Churchill Mining and what's some other crap. What is it? Oxford Gold?
Well, I wouldn't want to.
Yeah, okay, right, okay. I'll deal with that tomorrow. Thank you very much.